Hello everyone. Let me introduce myself. My name is M.Riza Kurniawan. My NPM is 2441119. On this occasion, I will discuss two important elements in accounting, namely 1. Account list or chart of accounts, and 2. General journal. Both are very important because they are the basis in the financial recording process. If you understand this well, the next accounting steps, such as preparing financial statements, will become easier. Let's start with the first discussion, which is register account. 1. Account list. The account list is a systematic list that contains all accounts that the company uses to record financial transactions. This list is like a dictionary for companies, because it includes all account names along with unique codes that make it easy to record. Usually, the account list consists of 5 main categories, namely 1. Assets. Assets are all the wealth owned by the company. For example, cash, business receivables, inventory of merchandise, equipment. 2. Liability. Obligation is a company's debt or liability to another party. For example, business debt, bank loan, tax debt. 3. Capital equity. Capital is the owner's right over the company's assets after deducting liabilities. For example, owner's capital, profit withheld. Prive, capital withdrawal by the owner. For income. Income is the company's income from its main activities. For example, sales revenue, service revenue. 5. Expenses. Expenses are the company's expenses to support operations. For example, electricity load, salary expense, office rental expenses. Example of simple account list. Account code, account name, category. 101 cash assets. 201 business debt obligation. 301 owner's capital. 401 sales revenue income. 501 salary expense load. This account list is used as a guide when recording transactions into the general journal. 2. General journal. After getting to know the account list, the next step is to record the transaction into the general journal. Definition of general journal. The general journal is the first place to record every company's financial transaction based on the order of occurrence. This journal is a detailed record that explains what happened, which accounts are affected, and how many. General journal function. General journals have several main functions. 1. Record all transactions. All financial transactions, both large and small, must be recorded in the general journal. 2. Provide detailed information. General journals record complete information, such as date, affected account, amount, and description. 3. Compiling data for ledger. Information from general journals will be transferred to the ledger for further grouping. General journal format. The general journal format usually consists of 1. Date. The date of the transaction. 2. Account name. Accounts that are affected by the transaction. 3. Debit and credit. Every transaction is recorded with the principle of debit equals credit. 4. Description. Brief explanation about the transaction. Example of general journal format. Date information debit credit. January 1st goods inventory 5 million.
Cash 5,000,000.
Description. Purchase of merchandise in cash. Steps to take notes in a general journal. 1. Transaction identification. Determine what transaction occurs, such as purchase, sale, or debt payment. 2. Determine the affected account. Choose an account from the list of accounts that match the transaction. 3. Debit and credit analysis. Use the basic principles of accounting. Assets increased debit. Assets decreased credit. Increased liability credit. Reduced liability debit. 4. Enter into general journal. Record transactions according to the journal format. Example of recording.